Very few people were expecting a cut today, 25 basis points. Very few people, even fewer, were talking about a 50 basis point cut, which apparently was on the table. Is there a read across? Is there anything I can usefully take and extrapolate out of New Zealand into the rest of the world?
Good morning, Guy. Yes, there is the short answer. There's always a read across in the RBNZ. They tend to be leaders in monetary policy, both in terms of how they conduct monetary policy and in terms of their cycles. They can quite often be a leader as well. The one issue here, so I never want to disregard it, the one issue here is, are we over-interpreting the dovish comments? The fact that they discussed 50 basis points, the fact that they're considering that today, that really surprised a market that wasn't convinced they would definitely even cut today 25 basis points. I'm a little bit worried we're over-interpreting that. I think that was more a message that anything is on the table. They want to be flexible, which is increasingly what central banks are moving back to. They're moving back to the old world of 20 years ago, where there was less forward guidance, more that central banks just reacted to the data, and that's how we all worked. We went through an aggressive period of forward guidance amidst all the other strange policy decisions we made over the last 15 years, and I think central banks are just trying to move back from that. So I think we're in a temporary period with the PPI last night that was soft, with UK CPI this morning, with the RBNZ that was dovish. Everything is coming up dovish at the moment at a time when yields had already slumped to low levels. And I think that, we're kind of pushing on a string of that narrative of soft yields, dovishness out there. I'm slightly worried that that teases up for a very asymmetric shock if CPI is strong today.
OK, before we get to the CPI of the US then, Mark, your take on that. And you nodded to the inflation print out of the UK, softer CPI. Does the data out of the UK this morning slay the hawks on the MPC?
I don't think so. I mean, look, it's certainly encouraging. What I think it does do is it backs up the idea that the UK is in a positive story at the moment, or at least it's going from a negative story to a much less negative story. And that's been a theme for the last few months, and it's going to continue. UK inflation and policy seems to be having less issues, less kind of whiplash that we're seeing in some of the other countries around the world. I think, look, inflation being soft is clearly good news today. It's not a low inflation print, though. We've got to remember that. These are still high inflation numbers. So, no, the hawks aren't completely slayed, but I think it definitely is clearly a dovish set of readings overall.
So what do you think the setup is into US CPI today?
I think, first of all, there'll be an asymmetric reaction in yields if it's a high print. The other thing to say is that last month we saw equities really dump after a soft CPI print, which might get people confused today, but do not be confused. Our colleague Simon Flint has just put out an excellent quantitative analysis showing that was the real anomaly. And if we get a soft CPI print today, that will be lower yields, and it will be very certainly good for stocks. And interestingly enough, he actually says the outsized performer in that lower yields and move, or a softer CPI print, will actually be small cap stocks, not tech stocks. So that's where you get your bang for your buck today.